Hello everyone and welcome to our new format in the case of the interviews. I'm so glad to have Jack Barnett as the VP at Business Development in Fortinet. So in the case of the Amazon sellers, should you right now be focusing on improving your brand on Amazon? For example, not exactly the PPC, yeah? What about the visual part? Should you right now working on that, or you will just need to sell? Any big improvements before the sale?
Yeah, I think something like just branding is a relatively easy value add. I used to think a couple years ago that brand didn't really matter on Amazon that much. It's a product-based search. Who cares what the brand looks like? You're just checking out the reviews, you're checking out the photos, and if you like it, you buy it. But what I'm seeing is acquirers are more interested in folks that have a good brand and a good brand story. And it seems like those businesses are also the ones that are doing the best on Amazon. Not 100% of them, but so I think that's something that it's not that hard. It's a lot harder to, try to expand to Europe than maybe just go and get a brand book and kind of start creating that story. So I think that's a relatively easy one. A lot of it depends on your timeline. Do you want to sell in 6 months? Do you want to sell today? Do you want to sell in 2 years? If it's a shorter timeline, then you kind of have less things available to you. If you have less than a year, you really want to focus on profit optimization more than anything, because it's going to be the last 12 months profit that you get your valuation on. So we generally tell people don't make a lot of huge changes in the 6-12 months,
because you will see them in P&L,
yeah, because maybe if you launch a product 6 months before you sell, you're going to probably spend the first few months at break even or at a loss. You're going to do a little launch, and then you won't see any of those gains, those profits. So
what is how to calculate the evaluation? Could the Amazon sellers try to bet themselves to understand what is the value for their brands right now?
Yeah, sure. So it all revolves around sellers' discretionary earnings, or SDE. That's the metric that's used here. It's basically the profit that you have, and then you add back certain expenses like a salary that you pay yourself, or other non-core or non-reoccurring costs. For example, maybe travel expenses. Most people are running their brands with tax efficiency in mind from accounting, but when you go to sell it, it's a totally different story. So you set aside the expenses that you just put in there as a small business owner, maybe your mastermind group or your travel or whatever, and you add those back to the profit, and then you come up with SDE.
I guess you have catch a lot of problems inside this topic. Exactly.
Yeah, I mean the buyers, they understand it, and they know that, okay, if you spent $5,000 going to Vegas for Prosper Show, that's not the kind of expense they're going to have when they run the business. So SDE is really all about getting to the core financial position of a brand that it will have after an acquirer takes over. So there's the traditional, okay, these are your numbers, this was your profit and sales and all your expenses. Then there's another concept of adjusted SDE, or adjusted profit, or pro forma. This is really the fun part that comes in when you're looking to sell. You might have events that happened in the last year, such as stock outs. There's been a lot of logistical issues that everyone's seen. You might have had a suspension for whatever reason for a couple weeks. So there might be situations which you feel will not occur again for the new buyer, but you lost sales from. So what we do at Fortinet is we'll estimate what those lost sales were, and we'll work hard on trying to negotiate that into the profit. And every dollar of profit that you add to your SDE is going to be another $5, $6, $7 when you look to sell. Those aren't ones, you can't just throw the whole kitchen sink into the SDE and buyers accept it. But if you have a good business case for saying, we stocked out because the Suez Canal crisis or whatever, it's not going to happen again, the buyers are doing those same calculations, and you should get credit for it.
Yeah, I like that. So as I understand, the accounting, that could be one of the main problems, for the Amazon sellers. They miss that on the beginning, and it's so difficult to come back. To understand what is what correctly, and it's take a lot of time, for set up all the things.
Yeah, it's totally true, and I think that most Amazon sellers don't love accounting. I think I've met enough to know that.
I guess most of the people, they don't like accounting.
I mean, that's not my favorite subject either. So it's something where that is like the real core of the valuation. So not only just recreating your accounting and having a bookkeeper, that's good and that's important, but knowing where you can kind of push the different buttons to increase that valuation is something that's really important, can add a ton of value. It's tough to say, specifically, hey, do this or do that, without, it's just so unique to each seller. But I guess the broad concept is think about what are some expenses or some lost opportunities that you had as a seller, and how do you create a narrative around that when you sell your business to negotiate a better price?
Could you please tell me more about the journey, about like what steps the Amazon sellers will have, if they want to sell their business?
Yeah, sure. So there's a couple different paths you could take, I guess. You could just take the path that the acquirer or the aggregator wants and, give them access to your Seller Central or your, dashboard, and they'll make an offer. We don't think that's the best route at Fortinet. What we see a 3-step process that's really critical to maximizing your valuation. First is a really thorough financial analysis. We do a full recreation of the P&L. We look really deeply, how do we do those add backs and where can we justify, different negotiation standpoints. So that's the first part. The second part, which we think is really important, is having like a deal memo or basically a presentation about your business. The ones we do are typically about 60 pages. It gets into brand, products, competition, opportunities for the future, problems that you've had that you can maybe reframe as actual opportunities. I think that's super important because when these aggregators or acquirers are looking at a deal, you might speak with 1 or 2 people as a seller, but then you're going to end up having those materials shared throughout the whole company, and you need a way to kind of tell your story and argue your case, via materials, via presentation. And the third step would be the go-to-market, where you start sharing those materials, the P&L and a presentation with potential acquirers. We think it's super important to have full market coverage of all the buyers. We have over 100 that are in our network that are looking for these types of deals. You need to take an orchestrated approach because when you're dealing with so many buyers, you never really know who's going to love your deal the most. So funny, like we've gotten to know buyers pretty well. Yeah, they might have a competitive brand and they think it'll be a great synergy, so you never really know who's going to be the best buyer for you and is going to offer the most. So you have to have super full market coverage and have it an orchestrated process where you can make sure you give enough time for each of those buyers to analyze your brand and make their offer.
So could it be like, should you take the best offer from the market in the case of the evaluations, like the higher, and I will be ready to go? Or have you seen some stones, like water stones, that could give some misconceptions here? Yeah,
sure. Well, not every offer is created equally, for sure. So you have a lot of situations where you get the headline multiple seems very high, but then the deal structure isn't favorable. So we think of our job as not just getting the best multiple or valuation, but making sure you have a good deal structure. If you have a 5 or 6x and one offer has 90% cash and one has 70% cash, then you probably want to take the one with 90% cash. I know sellers really value cash up front. So both are important, both the multiple and valuation as well as deal structure. I think the acquirer, it probably matters also if what they're able to do with the brand. If you have some kind of performance payment or deferred payment, you want to maximize your probability of getting that payment. And a lot of times that's tied to future performance and growth of the brand. So that could be a consideration as well. And of course, I think everybody wants to see their business go into, caring and capable hands.
What about the main problems that you have seen, inside the Amazon sellers? Because I think that you have seen a different deals, when sellers do them by themselves or with you. What the main problems that Amazon sellers do in the case of the negotiations or this process? Yeah,
sure. I think a couple of the big problems that people do is, they just take the first offer that comes. They don't really realize that these buyers are looking for the best deal they can, and fair enough. But I think that they don't shop their deals around enough. When you think of the actual process of selling.
You mean like asking all other acquirers about the deals, about the proposals, have any calls with them?
Yeah, exactly. Contact every single one you think might be interested.
Like open the market pools and start outreaching all of that.
Yeah. I mean, there's a couple websites you can find all 70 or 80 of them. We have buyers that aren't public that offer really good multiples and valuations as well. But if you're going to do it yourself, don't just contact 10 or 20 people. Contact 70 or 80 or 100, as many as you can. Of course, you need to do it in that coordinated way. So I think that's maybe the first one. And I think that, like I mentioned, when people give access to Seller Central at a very preliminary stage, it doesn't really make sense, because I think, some buyers, they want to fish for information. So you need to control that information and give it to them slowly, as only is necessary. So maybe sometimes sellers just kind of open up too easily and maybe are a little too trusting when it comes to dealing with buyers.
So there is not a situations like with one email, when you send like all the info and waiting for the proposal. It's more about the strategy. You're playing chess here, and you should provide with all things like part to part, and maybe to get this idea. And if the sellers will do by themselves, how much time that could take? Around 1 month or?
So speed is something that I know is really important to sellers, and we always say, hey, like, speed is important, and we recognize that, but you need to take your time here, because this is going to be a payday that might set you up for the rest of your life. You're dealing with a lot of money. So you hear 30 to 45 days from a lot of acquirers that that's their close time. We think, candidly, that's a little bit too quick. We think actually for due diligence, it's usually more like 45 to 60. And if you really want to prepare the books, prepare the finances and the P&L like you should, and if you really want to do this extensive market coverage when you're shopping the deal around, you really need kind of a month for each of those. So it's kind of, the way that our process runs is usually about 1 month of financial analysis, 1 month, 3-4 weeks of go to market, negotiating, etc. And then the buyers typically have 45 to 60 days of diligence.
Like like Amazon sellers, you spend more than 3 years or 4 years growing your business, and you just should wait a few months and everything will be okay. Like, no hurry up like here.
You shouldn't be in a rush. And I know how people are stressed, and a lot of people are selling because they're burnt out and they're getting suspended and they're concerned about the future. But it's a clear line between how fast you move and how much money you can get. If you move too fast, you're going to end up getting less money.
All problems it's about the cash up front,
There you go.
I like that. And I guess the final question for today, could you please tell me the future of the acquiring? What do you see and what do you expect from this market and from the Amazon sellers?
Yeah, sure. So I think we're going to see more specialization happening. I've seen already several acquirers that are starting to specialize in different categories or niches, different geographies. So I think we're going to see more of that specialization happening with the acquirers. There also seems to be a trend that the existing acquirers are starting to raise more of the money than new ones. So, perhaps you'll see less new acquirers, and the 70 or so that we have now are the ones that are going to kind of be the established players and take all of the new capital coming in. Of course, this whole business is around capital. They're buying brands and they need money for it. So I think that's where you'll see a lot of the growth going. I think you'll also see some consolidation happening amongst the aggregators. So smaller aggregators, people going out and buying 5, 10, 20 deals, being acquired by larger aggregators. I think we're already starting to see some of that. And I think that'll be kind of a big theme of the next 12, 24 months, is seeing which aggregators are successful, which want to sell because maybe they just are happy with what they've done, or some aggregators perhaps failing and have a fire sale of their portfolio.
Yeah, I like that. And what will be the final advice for our audience? I guess that will be a good opportunity for you, to finalize this interview.
Yeah, sure. I think if you're thinking about an exit, you need to, plan ahead of time. Don't rush into it at the last moment when you're super stressed out and burnt out. start thinking about it longer term. Of course, you know, at Fortinet, we're happy to have conversations with people and start, you know, helping put together a strategy. But I would say, first of all, just keep doing what you're doing, growing your brand, be profitable, and think long term about an exit, because you're going to end up, you know, probably getting more money from that exit than you ever did from actually selling on Amazon. So be thoughtful, and don't be scared to get advice. Don't, you know, necessarily think you can just do it yourself, because you're going up against tough competitors in the sense that the aggregators are, you know, well stocked with a lot of really smart people. So yeah, be thoughtful about it.
Great.
Yeah.
Thank you so much, Jake. That was a really good and deep interview about the acquiring. I'm really glad that you help us to go deeper into that, you know, to get all these stones and insights from your experience. That was really awesome. And thank you all for watching this interview. Please share your comments with us, and we will be glad to answer all the questions with you.
Share this video, like it, and subscribe.